Good morning. Today is Wednesday, November the 15th. The time right now is 10:36 in the morning. Today's recording is a little bit late. After all, we have a big night last night on the back of the release of the Consumer Price Index, or the CPI. Both the headline numbers and the core numbers came in cooler than expected. Now, for the month of September, month on month, the last number was 0.4%. Market was expecting a dip to 0.1%, which is considering very good. But however, the number came in at zero. So from 0.4 in September to zero in October, that is a big drawdown. And of course, the year-over-year numbers, market was September was 3.7. Market was expecting 3.3%. It came in at 3.2%. So all said and done, whether it's month over month or year over year, we can see inflation is definitely retreating. Now that gave market participant the idea that the Federal Reserve will have no reason whatsoever to continue tightening rates going into 2024, perhaps even cutting rate by May next year. So that caused a run-up in equity prices. We can see that in the Dow Jones futures contract, the micro E-mini futures rallied to just under 35,000. In fact, this market has been rising for quite some time now. This is the second week in a row. We can see that the prices has been rallying. Now, October ended on a weak note at 32,409, and since November the 1st, at the start of the the end of the FOMC meeting for November, so we can see that the market perceived the Fed chairman came in as less hawkish than normal. So that caused a rally in equity prices, which did not stop even up to last night. So we can see for 2 weeks in a row, this market has been basically one track. And while tonight we're going to expect the PPI numbers, which is the producer price index, which should mirror what we see last night in the CPI numbers, we also have retail sales. Now, retail sales could be the wild card here. Now, if the retail sales number come in stronger than expected, it means there will be inflationary pressure. This could basically undo the good that we see in the CPI numbers. So technically speaking, the market is in a crucial area. This 34,930 to 35,080 is actually a level in which the market saw a massive selling pressures, taking the price down to 32,400 in the Dow Jones. So again, if there's going to be any kind of negative news tonight, it could come out from the retail sales. So it could go either way. If the number came in lower than expected for retail sales, PPI is almost a foregone conclusion, because if it mirrors the CPI numbers, this should actually encourage further buying in equity markets. However, like I said, the wild card could be the retail sales. If it came in hotter than expected, that would basically negate all the gains that we see in the CPI number released last night. So if there's going to be any pullback, the first layer in which I think there's going to be support will be 34,369 to 34,459 in the futures contract. This is where what we call an order block, in which the price surged last night. There's another possibility the market may dip 38.2%, heading towards 34,000 levels. So again, this is another possible area of support. So we will have to watch these two levels if there's going to be any kind of pullback going into tonight's figure. Now, in the S&P 500 futures contract, this is the micro E-mini S&P 500, the market has actually gone marginally above the area, what we call an order block, in which previously there was selling interest. That level was 4,487 and a quarter to 4,514 and a half. Market traded to a high of 4,524 even, so it's about 10 points higher than the upper end of this range here. So again, this is vulnerable to the downside as well. If the market continues to edge higher, these are the various areas in which I think the seller may re-emerge. 4,556 and a quarter to 4,566 even, and of course, this is the all-time high at 4,619 and a quarter to 4,634 and a half. Again, this is the upside target. Downside, I think there's a possibility market may pull back to as low as 4,354 and a quarter to 4,373 and three quarter. So this is one area. The one area above it is where the market took off last night at 4,407 and a quarter to 4,437 and a half. So all these levels are going to be very crucial going to tonight's number. In the micro E-mini Nasdaq 100, you can see the price rallied all the way to just under short of 16,000 at 15,918 and three quarter. And this is not very far away from the high here that we see. The all-time high is at 16,062 and a half. So we want to watch how price reacts here. Okay. And then on the downside, downside, if the market experiences a pullback, the first layer of support is likely to be around 15,465 and a quarter to 15,588 and 3/4. And I think the other possibility is 15,138 even to 15,257 and a half. So again, all these levels, do note those levels as well. In Asia itself, you can see in the morning. Okay, I don't want to show you this. I want to show you the futures contract in the Nikkei. Now, Nikkei this morning has a riding on the back of the massive surge in equity prices on Wall Street. This morning saw the price at 33,390, and this is again within a bracket of prices which may see some kind of selling interest re-emerging. The level is 33,280 to 33,470, and beyond here will be 33,590 to 33,810. On the downside, any kind of pullback is likely to find support at 32,670 to 32,800. So those levels, again, do watch out for any kind of reaction. And over in the the Hang Seng Composite, the Hang Seng Index, sorry, not Composite Index. The Hang Seng Index has also rallied. This morning, it went up to 17,936 in the morning itself. So we still have very early in the morning. We still will see how the market will perform later on in the afternoon. There looks like the market may do a three-wave rally here, targeting something like 18,400 levels to 18,600. So again, this bracket of prices is going to be very, very interesting to watch. See if the market continues to edge beyond the 18,072 that we saw last Monday, then there's a very good chance market will extend a little bit higher to challenge the 18,392. On the downside, again, massive support at 17,136 to 17,363. Over in the dollar, now the dollar actually tanked last night on the back of these CPI numbers, because if the Fed has no more reason to hike rates, of course there will be less demand for the dollar. We can see the dollar index actually plunged way below the equality levels which I have pinpointed previously. So right now there is less reason to be holding on to dollar, but there is a dollar rebound going on as we are speaking. This morning we can see that the price here, sorry, this is not what I want to do. Hang on. All right, never mind. I can't see the icon from here. So anyway, the low here that we saw this morning is 103.99. Okay, so there's a bit of a rebound going on. Maybe let's see the futures contract here. Now the futures contract here suggests that the market may have hit a bottom here, or very near to a bottom, at least for the near term. The nearby bottom is at 103.21, 103.63. So if the market continues to edge lower, there could be massive support here. But in the meantime, we do see a very minor bounce in the dollar index. I think any upside potential is probably going to be limited to this swing low here, which is at 104.69, the futures contract. So I think basically there is scope for the market to come down again. So let's see what happens. If the market goes down to 103.22 to 103.63, there could be a case for buying for a retest of 104.69 going forward. Very, very, very minor move. And then overall, of course, in the euro versus the dollar, the euro actually rallied on the back of a declining dollar. We can see that euro dollar went up to a high of 108.87 overnight, which is just a stone throw away from the immediate resistance level at 109.13 to 109.45 basis the cash market. So we can see that this market have very little upside, in my opinion. More likely to be the case, we can see profit taking possibly emerging tonight around this area of 109.13 to 109.45. Over in sterling, similarly, I do expect some kind of pullback. The market right now is at a high of 125.06. This is exactly within this bracket of prices. You can see the upper range is 125.06. And if we do see a pullback, a few possibilities. Either the market have a very shallow pullback to 124.30 or 123.84, or this is it, and the markets continue to edge higher towards the next layer. The next layer is 126.12 to 126.43. So by and large, currency should be lower to buy. Okay, and over in the Aussie also have a massive run up, but currently the market has hit a pocket at 0.6510 to 0.6534 with a high of 0.6512. Now this is not very far away from last week high at 0.6523. So by and large, the market could continue to struggle beyond here unless the market punch and closes above 0.6534. The market may actually see a pullback. So in the meantime, do watch out for that as well. In dollar Canadian, this is actually a massive move. Yesterday, I was was selling the Canadian dollars just before the release of the CPI numbers. After an initial run up to 138.43, the market have a massive rundown to 136.82 by the close. And we can see that this was a good trade, but actually I took a loss in euro dollar as well as the Aussie dollar. Aussie dollar is a very small loss. So by and large, I did not come out worse off because this one trade here actually pays for the losses in my euro dollar trade. So of course, looking forward, I do expect this extension of a three-wave decline to actually move lower to 135.69 to 136.24 overnight. So not overnight, going forward. So do watch out for some kind of support around here, okay? And in the dollar yen, there was no intervention, but of course, when the dollar massively pulled back, the dollar yen also seen a massive unwinding of long position. You can see dollar yen went out to as low as 150.15. So we are currently seeing a minor retracement here at 150.82. Let's see if we can cap here between this area of 150.87 to 151.27. Okay, let's watch out. Okay, and over in the gold market, let's see what's the gold market doing. Now, gold market actually rallied last time, but you can see the rally is actually quite subdued, considering the massive move in equity markets. Now, this is the first time we see equity market rises together with precious metals, because they are supposed to go in the opposite direction. But despite the rally in equity markets, we see gold prices went higher to $1,971. And I think it will be struggling, because originally I was thinking this could be end up as a 5-wave decline. But because this morning high at $1,971 actually overlaps the low here, and that make this 5-wave scenario into a 3-wave structure. So not sure what to make out of this. I think generally speaking, this dominant trend is still favoring the upside. So if there's going to be any pullback, it's still lower to buy. If the market continue to edge higher and close above the $1,970 convincingly, then that would be great. That will bolster the case for further rise in gold prices even beyond $2,009. Over in silver, we see the same thing. Silver actually managed to rise to $23.18 before coming under very, very light profit taking. This is where the market took off at $22.27 to $20.40. You can see this move here is very aggressive. Now the prices right now will be coming under some kind of selling pressure here, because we can see the last few highs, the last few swing high has been lower. So this swing high here needs to go even beyond the $23.30, ideally above $23.70 to actually reignite the bullish buyers. Over in Bitcoin, we can see Bitcoin pulls back a little bit, but in a 3-way structure, which I have previously mentioned, and the market actually hit the lower end of the range at 35,104. So we can see that the low traded this morning is at $34,963.82. So this actually complete the 3-way pullback. If there's going to be anything, then I think we should be seeing a rally in Bitcoin going forward. Okay, any more dip in the Bitcoin would likely be arrested at 34,104 to 34,740. But I think there is a good chance, because on a close-to-close basis, we can see that the market has not taken out this very minor support line here, and this actually gives rise to the possibility of a continued rally or resumption of the rally above 38,000, ideally towards the 40,000 levels. So this is all I have for you for today. Now remember, tonight we have PPI numbers and retail sales, and it's going to be pretty volatile going into tonight's trading. That's it for me. I'll see you tomorrow when during the next update. Bye-bye. Take care.